So we are doing this income tax. Alright. So we have, okay. So we are starting with our, I don't know what's now with my pencil. Okay. So we are starting with section A, that is your income tax act. Now we have our first question, which says that Mr. Anirudh is a resident individual, aged 38 years, resident individual, default tax regime 25-26. Okay. Now see his gross salary, we are given 15,75,000, and you have startup receipts of 48,000 and 52,000 respectively. For salary, we have TDS of 109,200. He is opting for section 44 ADA. Then we are given these LRS remittance of 8,50,000 for university in Germany, that is education purpose. Then we have 3,50,000 for personal maintenance. And then we have house with 3 identical floors. Floor 1 self-occupied, floor 2 vacant, floor 3 let out. Now these municipal taxes and interest cost, these we need to divide by 3 and allocate to each of the house floors. So income from house property, if you do, we have municipal taxes of 30,000 will be divided to each. So 10,000 for each. Monthly rent we have 25,000. So 25,000 into 12, you will have 3 lakh as your house property income. Now from these you need to reduce your municipal taxes that you have paid. So 2,90,000. Okay. Now from 2,90,000 you need to reduce your 30% deduction, standard deduction. That is your 87,000 rupees. And then you need to reduce your interest on housing loan, which is 4 lakh rupees. Okay. So your income from house property, you will get a loss of 197,000. Now these 197,000, this is your default regime. It cannot be set off against an income under any other heads. You need to just forget this clause because this cannot be carried forward in your default tax regime. So for your first MCQ that we have, compute the income under the head income from house property for assessment year 26-27. So the correct option is loss from house property 1,97,000. Entire loss of 1,97,000 can be set off against other heads of income. Now we have moved to the second question. Alright. So for second question, they are asking the authorized bank is required to collect TDS from Mr. Anirudh for foreign remittances. So see, now foreign remittances we have these two, 8,50,000 and 3,50,000. Now individually, if you see, neither is crossing your 10 lakh limits. But if you see collectively, it is 12 lakh, which is more than your 10 lakh. So on excess 2 lakh at the rate of 20%, this will be applicable, which comes to 40,000. Okay, so for a second option, the A is your answer, that is 40,000. Now coming to the third question, capital gain arising from transfer of commercial plot. So for commercial plot, we have sale consideration as 65 lakhs. We have stamp duty as 65 lakhs. Since both of them are same, so we'll be taking 65 lakhs only as our full value of consideration. So full value of consideration 65 lakhs. Now cost we are given 40 lakhs. Okay. So your long-term capital gain in this case will be 25 lakhs. Now see, we have cost and inflation index for 25-26 and 23-24. So we need to find out indexed cost of acquisition. So indexed cost of acquisition will be 43,21,839. How it is coming? 40 lakh into 376 divided by 348. This will give me 43,21,839. Okay, so my balance amount will be 21,78,161. Now on these I need to pay. See, either on these I can pay 12.5% or on these I can pay 20%. So these 12.5% comes to be 312,500 and these 20% comes to be 435,632. So lower amount is this. I will go by this. Okay. So option that we have is long-term capital gain of 25 lakhs and tax thereon is 3,12,500. Now we need to compute gross total income. Okay. So for gross total income, we have these gross salary. See, we have gross salary. Okay. 15,75,000. Then you have standard deduction. $75,000. 15 lakh. Then you have PGBP income. Now presumptive section 4480, so you need to show 50% of whatever he is earning. $50,000. Alright. Now for house property, we have calculated. Now these laws cannot be set off. So I will take house property as nil. Then long-term capital gain I have calculated as 25 lakhs. So my gross total income that I get is 40 lakhs 50,000. Okay. 40 lakhs 50,000. Now compute the tax payable after considering TDS TCS for Mr. Anirudh for the financial year, for the previous year 25-26. So total income we have seen was 40 lakh 50,000. Now long-term capital gain was 25 lakh. Okay. So my balance income will be 15 lakh 50,000. Now long-term capital gain at the rate of 12.5%. Okay, this was 312,500. Now tax on 15.50 lakhs I need to calculate. So 15 lakhs 50,000 default tax regime up to 4 lakh nil, 4 to 8 lakh 5%, 20,000, 8 lakh to 12 lakh 10%, 40,000. Now 12 lakh till 15 lakh, 16 lakh, we have 15%. So from 16 lakh, you'll reduce 50,000. Sorry. 50,000 minus 12 lakh into 15%. So this comes to 52,500. So your total tax comes to 112,500. Now, these 112,500 plus 312,500. So your total tax becomes 425,000. Okay, these plus these. Okay, that is my total tax liability. Now I need to add education cess at 4%. 425,000 plus 4% will give me 442,000. Now TDS. So on salary, see salary we are given this TDS of 109,200. Okay, salary 109,200. Then you have TDS, TCS of these LRS scheme 40,000. 40,000. Okay. Then I have TDS of see for these 48,000 TDS will not be applicable, but for on these TDS will be applicable, okay, at the rate of 10%. So 5200 I will have TDS 194J. Then I will have TDS on these 65 lakhs, okay, more than 50 lakhs, so 1% over here, 65 lakhs into 1%, 65,000. Okay, TDS on your house property, TDS on your that fees for technical service, sorry, your PGBP income, okay, on that TDS. Now when you reduce all these amounts, what do you get? 225,800. I think we missed something. Okay, house property loss, okay, that we don't need to consider. LRS, TCS, that we need to check. So TDS on 52,000 payment I've considered 5,200. Then on 65,000, okay. And we have 222,600. Okay, 65,000 pages. 40. Okay. I did calculation mistake. The answer is coming 222,600. Okay. So this first question we have solved. Now we have sixth one. Mr. Vikram, a foreign citizen and person of Indian origin, resides in country Z. He operates an international management consultancy firm. During the previous year 25-26, he traveled to India for official come personal visit. His consecutive period of stay in India during the current and preceding financial years we are given. Okay. Now we complete the following details regarding his global and domestic income streams. So we are given the incomes, we are given the dates. So we need to calculate these residential status first, and then based on the residential status, we will see which incomes are taxable in India. So quickly let us find the residential status. Now see, he is a foreign citizen and person of Indian origin. Now we are given the days. So for preceding 4 years, if you calculate these preceding 4 years, it is 375 days. Okay. Now the conditions that you need to check is 182 days or more, or 60 plus 365 in the preceding 4 years. Now this person is person of Indian origin. So now here you need to check Indian income should be more than 15 lakhs, and in that case your this 182 will get replaced by 120. Okay, so let's check if the Indian income is more than 15 lakhs or not. So see, we have these professional income 1,75,000. Then you have management consultancy income 8,50,000. Then you have gross annual rent received 3,50,000. Now from these 3,50,000 you need to reduce 30%, that is 105,000. So you will get 245,000. Okay. Now see the important point, municipal taxes of 20,000 borne and paid by tenant. Since tenant is paid, you are paying, you will not get the deduction for them. So these you don't need to consider. So your income from house property will be 2,45,000. Okay. Then you have these SBI interest. Okay, that is 2,20,000. Then you have income. This is in countries that this is in Sri Lanka, not in India. So not Indian income. Now these when you make total, it comes to 14,90,000, which is not crossing these, which means the stay, since this is less than 182 days, okay, so your condition is violated. So this person is non-resident. Okay, first question we have solved, determine the residence status. It is non-resident. Now we have to compute his total income based on his residential status. Now, so for computation of gross total income, what we need to do is income received or deemed to be received in India and income accruing or arising or deemed to accrue or arise in India. So your house property will be considered. Okay. Then your professional income from Indian activities 1,75,000. Your SBI interest of 2,20,000. Now this is your foreign consultancy income. Okay. See, foreign consultancy income. Then you have these Sri Lanka countries head. Alright. So your total income will be 6,40,000. These 2,20,000, 1,75,000 and 2,45,000. Okay. Now moving to this question number 7, Mr. Rudra and Mrs. Shivani. They are resident in India for the previous year 25-26. Mr. Rudra has explicitly chosen to file his return under the default tax regime. He is filing under 115 BSC. Then Mrs. Shivani chose to opt out. Okay, Mrs. Shivani is going for our normal tax regime. That is your optional regular tax regime. Now they've given Mr. Rudra is working partner in Messrs. Dayal and Company Partnership Firm. He has salary 8,20,000, which is gross salary. Okay. So your business income 8,20,000. Now why have I taken this as business income? Working partner. So any salary that your partner receives from a partnership firm, even if it is named salary, it will come under your PGBP section. Please remember this. Now we have house property loss, which is your brought forward loss 1,96,000. Now current year property loss can be dealt with in house property under your default tax regime, but it does not allow us to set off any house property brought forward loss. So forget this. Okay, currently your loss also forget. Why? Because we don't have any house property income. Now we have gift of 1,35,000 received from grandfather's younger sister. Now grandfather's sister is not a relative. Okay. So 1,35,000 in IFOS will be taxable 1,35,000. Then you have dividend income of 60,000, which is gross. Again, this will be under your IFRS section, 60,000. Okay. Then you have Shivani suffered loss from boutique business. Now see, uh, 2,10,000 business loss. This will be clubbed with Mr. Here, this is not Mr. Suraj, it is Mr. Rudra only. Why? Because it has been carried on the business. The funds were gifted by Mr. Rudra. So these loss will be coming here, 2,10,000. Okay, business loss. Now you have, okay, fine. So these will come to 6,10,000. Then your IFRS income you have 1,35,000 and 60,000. So your total income will be 8,05,000. Okay. Okay. Now talking about Miss Shivani, she is receiving cash gift of 11 lakh from Mr. Rudra's grandfather's younger sister. Okay. First we will check what was Shivani's income. Okay. So she is employed as an interior layout planner with monthly salary of 50,000. She does not possess the required qualifications. Now since she is not having this required qualifications, so clubbing will apply. Okay, so taxable salary 50,000 into 12, 6 lakh minus your standard deduction of 50,000. So your salary will income will be 5,50,000. Now you have another thing, which is Mr. Rudra gifted equity shares of 80 lakhs to his brother's wife, Mrs. K. Subsequently, Mr. Rudra's brother gifted commercial building located in Mumbai valued at 60 lakhs to Mr. Rudra's wife, Mrs. Shivani. Mrs. Shivani immediately let out this commercial building and she is earning a gross rent of 2 lakh rupees. Okay, this is your gift or circuitous transfer. Okay, so here subsequent transfer connection between transactions. So your these, one second. Okay, so these income will also get clubbed. Okay, so 2 lakh also you need to add. Then we have okay, the interest on enhanced compensation. It relates to transfer of fees. Now okay, that amount again 2 lakh, that we will be adding. So now total income that you will get after adding all this will be 16,50,000. Now we have question number 8, which says examine the applicability of TDS. So we have Mr. Vivek and we are given the turnover of 18 crores in the previous year. Okay. Now since, turnover of 18 crores, yes. So if you cross the 10 crores turnover, then 194Q is applicable. Okay, now we have purchase on 15, 24 lakh, then 31 lakh, then 29 lakh. Now if you do the total, you have for 84 lakhs. So now what happens is, once you cross your 50 lakhs, then your TDS will be applicable. So TDS is not applicable for these 24 lakhs. Then we have 31 lakhs. So when you add your 31 lakhs to your 24 lakhs, the amount, cumulative amount that you get is 55. So on these 5 lakhs, which is additional crossing 50 lakhs limit, threshold limit, on that 5 lakh, 0.1% will be applicable. Okay, which is your 500. Then on your 29 lakh also 0.1% will be applicable, 2,900. Okay. So total 3,400 TDS will be applicable. Then we have ABC Technologies paid 42,000. Now remember 194G, no limits, directly 10%, 4200 TDS applicable. Then compensation for compulsory acquisition, threshold limit 5 lakh, threshold limit not crossed, TDS not applicable. Okay. Now we have question number 9, which says Mr. Summer is 62-year-old senior citizen, resident individual. Now he is choosing to file tax under default tax regime 115 BSC. Computed income 3,80,000. Basic exemption limit 4 lakh. Electricity consumption threshold limit 1 lakh. Okay. Then this TDS threshold limit 50,000. And for gross receipts threshold limit 60 lakhs. None of these limits are crossed. So no mandatory requirement to file the return. Now, second point says single cash bill 60,000. If you are paying cash bill of more than 50,000, PAN number needs to be quoted. Account pay check 48,000. This provision is not applicable. Okay. So PAN number needs to be quoted for these and not for these. Now question number 10. First we have this Mr. Advit, age 48 years. Okay, net profit as per P&L account is 25 lakhs after debiting or crediting the following items. So P&L is 25 lakh. Okay. Now first we are given 35,000 cash payment directly made to creditor. When you are paying directly to the creditor, the limit that you will check is more than 10,000 in cash. Now since here this limit is being crossed, so these 35,000 you need to add back. It will not be allowed as your expense. Then we have gross interest received on corporate bonds amounting to 20,000. Now this is not your business income, it is your IFOS income. So you need to add back to your business. No, you will reduce it from your business income. Okay, it is already coming in your business income. Now we have contribution of 1,50,000 made on approved university for social science research. Now when you are under 115 BSc, okay, there are certain restrictions to your specified deductions, and your eligible scientific research expenditure is deductible. So this is, since it is given to a specific university, okay, so these will be not allowed. So you need to add back 1,50,000. Now you have commission of 2 lakh paid to local sales agent via account pay check without TDS. See, whenever you are making any payments and you are not deducting TDS when TDS was supposed to be deducted, and you are making the payments to resident person through account pay check, account pay draft, or any RTGS or any electronic clearance system, 30% of your these expense will be disallowed. So 60,000 you need to add back, which is disallowed. Now normal depreciation 5 lakh including depreciation on total cost of new plant and machinery purchased and put to use on 12/7. Now since it is purchased and put to use on 12/7, so you will be able to claim full depreciation for that. Okay. Okay, new machinery and put to use. Now what they are saying is subsidy of 20% received amounting to 4 lakh rupees. So on these 5 lakh, you are getting subsidiary of 4 lakh. So on 4 lakh, whatever depreciation 15% is having, that you need to add back, okay? Because like you cannot take both the subsidy and your depreciation. Now this government subsidy, that is reducing your actual cost. So you will be reducing 4 lakh from business income if that was credited to your P&L account. So here it is given that you have credited. So you will be removing these 4 lakh rupees. But since you have already taken the effect in depreciation, we will not do anything to these now. Then we have medical expenses include 60,000. Okay. So now there is a separate deduction under section 80DD, wherein your personal medical expense for dependent son with severe disability, you will get the deduction under your alternate tax regime, not in your default tax regime. So these 60,000 also you need to add back. Then we have advertisement published in souvenir of this political party. Again, this is not eligible for your new tax regime. So 80,000 you will add back. Then you have MSME payment. Okay. Now see, for MSME payment, we have 50,000 that is to be paid. Purchase date is 15/3 and payment is made on 25/5. Now as per the MSME Act, this payment is relevant. Okay, there was written agreement between them specifying 15-day payment period. So since this is not taken properly, so you need to add it back again. Okay, so you'll get your total adjusted income as 30,95,000. Now from these, corporate bond interest 20,000 and 4 lakh of your subsidy you will get as your deductions. So your total business income comes to 25,75,000. Okay. Now we have a sale price for this commercial plot sold for 15 lakhs. Original cost 3 lakhs. Okay, acquired on 5/4/2008 and sold on 10/6. Okay, 5/4 it was acquired and it is sold on 10/6/2025. So your holding period is more than 24 months. It is your long-term capital gain. Now we have to find indexed cost of acquisition on 3 lakhs. So your indexed cost of acquisition comes to 8,23,358. So in that case, your capital gain will be 676,642. Okay, and without indexation, your capital gain will be 12 lakh. Now on 12 lakh, 12.5%, you will get income tax liability of 1,50,000. On this amount at 20%, you will get 1,35,328. Since this is less, you will be considering this option. Okay. Then you have these prepaid principal loan. Now for this premature withdrawal of post office that we are given, which includes interest of 15,000 and amount that you are receiving is 105,000. Okay. So now these entire will be taxable. Why? Because it is premature withdrawal. If you are receiving premature withdrawal of 5-year post office term deposit, the entire amount is taxable. Then we have 4,80,000 from house property, let out house property. Municipal taxes of 50,000. Now see, since they are paid on 10/4, so these you will not be allowed. From 4,80,000, you can reduce your 30% standard deduction. Okay. So house property income, you will get 3,36,000. Now, repaid housing loan principal of 90,000 and interest of 1,10,000. So you can reduce this 1,10,000 from these. You will get your house property income at 226,000. Okay, then business income we computed 25. This is your business income, 75,75,000. Then your house property income 2,26,000. Then your these 12 lakh as your capital gains, and your income from other sources we have 1,25,000. Okay, so his gross total income that you get is 2,26,000 house property, 25,75,000 business income, 12 lakh capital gains, 1,25,000 income from other sources. Total comes to 41,26,000. No chapter 6A deductions, so your total income will be 41,26,000. Okay, now this finishes your RTP. Thank you everyone.